All right. So, so you're welcome once again, right? So today what's gonna happen, and it's we've gone through different things. So I'm gonna actually open the floor so that you can ask you can ask questions. Let me know what do you think, or what areas it's great for you and you would love to have me sort of maybe clarify or go through those areas. So yeah. So I'll be opening the floor, and you'll be able to, so you can just maybe raise your hand if you have any question, and then yeah, just give you the floor. You'll be able to ask, your question, right? So let's start from there today. And yeah, so let's see. Sorry a sec. Just a second. Okay, so Williams, yeah, fire on.
Morning, Jonathan.
Yeah, good morning. How's today?
Fine, thank you. Thank you. Thank you very much for all this effort. It's not easy, honestly. The timing and the rest.
Mm.
So I wanted to ask, I don't know if you have covered, because I missed, there were a few classes which we were not able to attend, but just wanting to be sure if you covered calculation of lot size and risk.
Mm.
Um, I don't know if you've covered that, and I want to know when if we are closer to that area.
Mm.
Yes,
Okay.
yes,
Okay. So risk reward and lot sizes.
yes,
Um,
calculation.
lot sizes or position sizes, basically. Yeah.
Yes, yes, correct.
Okay.
Yes. Uh,
All right. Uh-huh. Okay. So well, I'm noting that down. I think I have done that in passing. I haven't done that in depth. So yeah, so I'll touch on that today. Yeah. Okay. So
thank
thanks for that. Is that the only area, or there's some other area?
I think that will be all for now.
Okay.
Yes.
Okay, cool. All right then. So any other question? If you have a question, feel free to just unmute yourself and then ask your question so that if your areas haven't touched or you need clarification, let me know. So just unmute yourself and ask your question if you have any. Okay, so I would assume this is just a question for now. So I will just try to highlight that. So more like explaining risk to reward, and then position sizing, in trading, right? So, all right. So let's get it going. Now, when we talk about risk to reward in trading, I believe you're all now very familiar anyways with the way I sort of structure my screen. I would normally have, three different screens up. One for the 4 hour, one for the 15 minutes, and then one for the 1 minute. Um, and you have that just the way you see here on the screen. If you're using the free trading view, of course, I think the limit you have will be two. I think so, or no, I even think it's just one screen. But you can always move from time frame to time frame. So, but this just allows you to see everything just the way it is here. All right. So now, talking about risks to reward. Now in trading, I just take this tool here. So let me expand one of this. Let me use this. So in trading, we have trading is all about risks to reward, right? So risks to reward this. Now, trading is all about risks to reward because what's happening in trading is that you're always risking something in order to get a reward. So you always see something like, let's see this, 1 to 3. sorry, 1 to 3. Yeah, you see something like 1 to 3. That's too small. Yeah, 1 to 3, 1 to 4, 1 to 5, 1 to 10. Yeah, something like that. You always see something like this. In fact, when I post some of those free stuff on the platform on Telegram and all of that, I always use the type of trade or the risk to reward for the trade that I entered. Now, what this simply means is that if you're risking 1%, or if you're risking $1,000, or I always love to think about this risk to reward in terms of percentage. So what that means is that now, first off, to start with, it's always advised that you aim for a 1 to 2, right? At 1 to 2 and above. I'll always say, for me, I say it's 1 to 3. So if the trade cannot, there's no room for you to get like up to 1 to 3 in the trade, then it's not even a trade you should consider. The reason is because the more your reward, now the more you would be in profit, or the better position you are to be in profit, rather. Now, what that simply means is this. Now, in trading, you're always risking something. That means when you come into any trade, the first thing you're thinking is not how much you're going to make. The first thing you're thinking is you have to settle is your risk management. So you have to settle your risk management. What are you willing to lose to enter a position? What are you willing to part with to enter a position? So you're always thinking in terms of risk management. So, for example, if you have an account, let me say the account you have is 100, let me say it's $1,000. Let me say this is the size of the account that you have. So the account that you have is $1,000. Now, you want to make sure that you know what percentage of the account you're risking per trade. So if I have a $1,000 account, a 1% of $1,000, right? 1% of $1,000 is going to be what? It's going to be $10, right? That's 1% of $1,000. 0.5% of $1,000 is going to be what? It's going to be $5, right? And then you can do the maths. You basically can continue to do the maths like that. Now, when you're trading, the first thing you always want to know is, what am I risking in order to enter a position? That's the first thing you have to know. Because if you don't know what you're risking, then it's more like you're just trading blindly, right? You're in a blind spot. So you have to know, what am I willing to risk in order to enter a position? Now, the reason why you need to know your risk is because at the end of the day, capital preservation is the goal of trading, because you want to make sure that you can take a number of trades, 10, 20, 30 trades, and still you have capital to trade. Now, most people, for example, who trade, unfortunately, don't understand risk management, and they just say, oh, I have $1,000. Okay, there's this high impact news that's going to come out. I'm going to risk $1,000 and I'm going to make $10,000. People always think in terms of the reward they want to make, and they're not always thinking in terms of the risk. Because if the news comes out, you're trading news, which is simply gambling for me, except you have a proven strategy that you've used over and over again, but it's usually high impact and can go both ways. So if you're only thinking of the reward, oh, if I risk $1,000, I'll make $10,000. How about if the news goes against you, and what happens? It wipes you off completely of your $1,000. So that is not, that is a typical trader who doesn't consider risk management. So the risk to reward is simply the crux of your risk to reward is to always say, hey, put risk management at the forefront, because you want to preserve your capital so that you're in the market for the long term. Most people, or most traders who trade the Forex market, always give up simply because they usually don't have a good risk to reward system in place. And now let me still draw down, let me still sort of drill down on this. Now let's imagine, for example, you see a trade and you want to enter the trade, and then you decide to risk, let's say, 1% of your account. If you risk 1% of your account, right? Let me say you're entering a trade, sorry. Let me say this trade opportunity let's say trade opportunity of, now you have the potential of making, let's say 1 to 3, right? 1 to 3 RR. You always see something like this, 1 to 3 RR. Now, this is a trade you saw, and the potential opportunity is 1 to 3. That means you're risking 1% to make 3%, or you're risking 1,000, whatever the amount of money is, one of it to make 3 times of whatever it is you're risking, right? So that's the way to think about your risk to reward. You're risking one part of the money to make 3 times of what you're risking. So the 3 means you're making 3 times what you're risking. So assume the one part of the part of the money you're risking, the one is 1% of your account. Now, in this case, for $1,000, 1% of $1,000 is $10, right? And then the potential reward, now this is the risk. Let me write it out like this. Your risk is 1%, which is the same as $10, right? That's your risk. Now, and then you're looking forward to making 3 times of your risk. That's 1 to 3 RR, 1 to 3 risks to reward. So you're looking forward to making 3 times your risk, which would be what? 3%, right? Assuming your 1 means you're risking 1% of your account, and your 3 means you're looking forward to make 3%. So if you make 3% of $1,000, that'll be what? That'll be $30, right? So you're risking $10 with the hope of making $30. If it goes your way, you make $30. If it doesn't go your way, you make what? You make $10. That's the simple meaning. That's the simple interpretation of risk to reward. So now, this now happens that, okay, you enter the trade, and after you enter the trade, let's assume it's a loss, right? Let's assume the trade was a loss. What happens? You're now down by $1,000 minus 10. You're now down by 9. You're now down to $90. That's what you're down to. Now, imagine the trade was a win. If the trade was a win, right? So that means you'd be up by $1,030. That's the meaning. Correct that. Yeah. So you'll be up $1,030. That's the meaning, right? So this is basically the concept of 1 to 3, of risks to reward. Now, the tool, I'm going to go to the tool shortly, but you have to understand, now understanding this concept is super important, because before I even get to the tool, let's assume now that, as a trader, this particular trader, hopefully not you, decides to say, hey, I want to really just make all the money in the world in one day. And then they decide to say, okay, I want to risk, instead of risking 1% of the account, now they decide to say they want to risk maybe like 10% of the account for one trade. Now that's a lot, because if you're risking 10% of your account, we're going to see that shortly. It wouldn't take a long time before you're wiped out completely. You lose all your money. But imagine somebody is risking 10% of $1,000. That would simply mean that they're risking $100, right, per trade. And then they are hoping to make $300 for a 1 to 3 risks to reward. That means 1 to 3, you're risking 10% with the hope of making 30%. So that means this is what you're hoping to make, and this is what you're risking per trade. Now, risking 10% is a lot, and by the time you begin to look at maybe the trade capital, maybe you're having $200,000 or 1 million. Risking 10% is like risking a lot of money, if to really trade. So the sweet spot anyways is really below 1%. In fact, it's actually 0.5%. As your skill grow, you can now begin to think of risking 1% and then growing that. But imagine somebody risking this and they have $1,000. Now, to do this, they just need to trade about 10 times, and then if all the trades are losses, they'll be wiped out of their capital, right? Now, but imagine if you're risking 1% of your account of $1,000, it would take you like almost 900 trades or thereabouts for you to lose your account if you consistently continue to risk $10 on a $1,000 account. So you see the difference, right? So you have to understand, it's very important to understand what you're risking. For me, I don't even risk anything. I only risk less than 0.5% per trade. when I enter a trade, I always risk less than 0.5%. I usually use 0.5%, and then in some instances, I go to 0.25%. And the reason is simply because I want to be in the market for the long term. So you're going to have trades that will be winners, and you're going to have trades that will be losses. So you have to say, hey, I'm not gambling. I'm not here to gamble. I'm not here to get rich quick. I'm here to master a skill. I'm here to understand how this works, and I'm willing to grow gradually. So you consistently, risk low, so that as you build your account, as you gain confidence, as you understand, your trading system, your trading setup, you can now decide to say, okay, let me move it up a little to maybe $1,000, right? And now this is okay. First of all, so this is just the concept of risk to reward, right? So you're risking something to really just get something. Now, let's talk about the tool, right? So the tool for the risk to reward that you always use on TradingView, for example, this is it. So this tool here, as you can see on my screen, hope you can see where this is. So you can see here you have this. Let me just drag it to the center. So you can see here you have this short position and then long position, right? Now, this is basically the tool that helps you to calculate your risk to reward. So if I just bring it out, let me bring this long position out like this. So you can see just by dropping it on the screen and hovering my hand around it, you can see it shows 1, right? And what this means is that right now, this is a 1-to-1 risk to reward. That means I'm risking whatever it is I'm risking, I'm also making the same on the reward side. So 1-to-1. Now, by the time I begin to reduce this, you can begin to see the risk to reward, number around here begins to change, right? You see it? It begins to change. Now, if I just put this, let me put this at 5, right? That's 5 pips. Now, let me show you what that means. And then let me bring this to 5 pips. If I'm risking 5 pips with the hope of making 1 to 3, that means I'm making 15 pips. I hope you can actually see, let me expand this a little bit. I hope you can actually see the numbers. So you see, if I hover over this, you see here, down below here, we have 0.0005. That's this 5 is the pips, the number of pips that I'm risking. So I'm risking 5 pips, right? This last number is called a pipette, okay? And you'd always see, if you count the numbers, you have like 5 numbers. In some trading stations or some platform, maybe MT4 and all of that, you may just see 4 numbers, which tells you that the last number is the pip. And then if you have 5 numbers after the decimal point, that means that last number is a pipette, right? And you see that also in TradingView, you have about 5. The last number is a pipette, and then the last number is the number of pips. So yeah, so this means that I'm risking 5 pips with the hopes of making 15 pips, of catching 15 pips. Now this is it. So that's why it is 1 to 3. So 5 to make 15. That is a 1 to 3 risk to reward. If I pull this up to 4, you can see here that this is a 1 to 4 risk to reward position. So that means I'm risking 5 pips with the hope of making 20 pips. And then you can begin to draw this. We can draw this to 5, which is usually the sweet spot for me. The average trade I enter is 1 to 5. So here you can see this is 5 pips with the hope of making 25 pips, right? Now, I hope that's clear. Now, let me explain this tool or how, this setting, because this is not default setting you would see on your own interface if you pull this out. So if I just double click this, you see this comes up. Now, let's look at some things here. Now, you see here you have account size. You have here lot size. We'll talk about this lot size surely soon. That's position sizing. Here you have the entry price. The entry price is this point here. I hope you can see the crosshair. The entry price is this point here. That means you're hoping that you'll be the price will tag you in here, or basically the market will tag you in here. So that's your entry price. So if you look at the crosshair too, and you look at the right side of TradingView, you see that the numbers actually match. So you have 1.08043. You see that it matches what you have on trading view to the right of the crosshair, and also what you have on the long position tool. So that's the entry price. Then you have the profit. So the profit is your take profit. That means that is where you want to take profit. So if price tags you in, you want to take your money here. So that is your take profit target. So if you look at that too, if I put the crosshair there, you see that the number to the right of trading view also matches that number there, 1.08293. So it's the same take profit target. And then your stop loss is also the same thing. So if you look at the right also trading view, and you look at where I have the crosshair, you see the number also matches. So that's your stop level. What that means is you're saying if this trade is invalidated, this is where I'm willing to take my loss. That's essentially what you're saying, right? So you're saying this is where I'm willing to take a loss. So that's why you these are the tools you need to have, when you're trading. I didn't even write that. So because when we talk about position sizing, there are different things. Lots, take profit, position, why are you willing to take profit, and then why are you willing to leave the trade, stop loss. These are very important, concepts when it comes to talking about trades, trade risk management, trade entry, trade management, and all of that. I'll still talk about lots soon. So your take profit location is basically where you're willing to say, I'm willing to take my profit here and I'm done. Your stop loss is where you're willing to say, okay, if this trade does not go in my favor, this is where I'm willing to take my loss. Now, your stop loss position must be equivalent to what you're willing to risk. So if you're risking 1%, that means if the trade goes against you, you lose $10. If you're risking, 0.5%, that means you're risking $5 for a $1,000 account. So if the trade goes against you, that means you lose $5 and you are okay with it. That's the meaning of your stop loss. And your reward, your target simply says, if the trade goes in my favor, that is where I'm going to take my reward. Now, when it comes to trading, aside understanding, the technical indicators, there is the aspect of the psychology, which we're going to get to, sometime later. Because some persons, for example, imagine you have a trade and the trade is working out. What some persons would do, imagine you had price doing like this. Price was just going up and down. Sorry, let me draw that again. Let's say price was just going, up, down, up, down, up, and then price tags you in, right? And then price started doing like this, did like this, and then pull back. Now, a lot of people, traders who haven't mastered their emotion, when they see something like this, they feel, oh, price was almost coming to my target, and then price automatically reverse. Oh, I'm going to be taken out. And then they now close the trade. And then what happens? Price now comes back and then hits their target. And then they begin to feel sorry for themselves, right? So we're going to talk about, trading psychology later on, but this is the reality of how price moves. So when you understand your risk to reward, that simply means you're saying, hey, this is what I'm willing to risk in order to make this amount of money. And I'm willing to stay consistent with it, irrespective of price action. And what that means is that even if price comes here, almost to my, almost hitting my target, and then price reverses, I'm not going to touch the trade. In fact, I'm not even going to be looking at the trade to sort of manage it. Now, for me, this is what I usually do. When I see this, for example, let me assume I'm entering a trade. I would normally enter, right? Let me say my tool was here and I got tagged in like this. Immediately I get tagged in, the next thing I do is I'll put an alarm on my stop loss here. I'll put an alarm here. Okay, this tool allows you to put, oh, that was fast. Just in case I did too fast, let me do it again. If you move your crosshair, just to the right of your trading view, and take a position, you have this plus sign here. When you click on it, it will say add alert for, euro dollar at that, location. So I'll normally add an alert there, right? And also, if you look at this too, maybe around, the top here, you see this? So I'll also now put an alert. So I'll put two alerts at my stop loss add alert, I'll do that. So I'll put alert at my take profit location and also at my stop loss. The reason for that is this, and when I do this, I'll just close the trade. I'll not be watching it. Because if you continue to watch the trade, all this price is not linear. Price doesn't move like this. Price doesn't just move like this. Like you just enter a position and the price will just go zoom and just hit your take profit. That's not how price works. Price is always, zigzag, moves in a zigzag motion. And this is a typical example of what price can do. If I can even be worse than this, imagine, let me even paint another scenario. Imagine, for example, you got tagged in, right? And then price does this, and then comes close to your stop loss, and then moves up, and then comes close again, and then does this, and then, does this. Price does this. This is how price works. And then comes again, and then does this, and then comes close, and then almost taking your profit, now pulls back again before taking you. Before hitting your take profit. Now, this happens. And for traders, this can be very traumatic if you haven't mastered your emotion, right? So when you're entering a trade and you already know your risk to reward, you already know your position sizing, you have to accept the fact that price, you have to accept the first thing you have to accept is your loss. If you're entering a trade, the first thing you have to accept is that this trade is going to be a loss. And if it's a loss, I'm satisfied with where my loss, my stop loss is. That means I'm satisfied with what I'm risking. So I'm not going to be fidgety. I'm not going to be angry. I'm not going to try to revenge trade. That's the simple meaning, of the stop. I'm sorry, that's the simple meaning of having, the risk to reward tool. So I'm satisfied. If it's a loss, I'm okay with it. Because before you enter a trade, by the way, you've done your technical analysis, you know what you've done, and then now you're simply just executing. And usually it's in executing that a lot of people cut themselves short. For me, as I speak to you, there are times, for example, I was still going to talk about that, how to journal trades and also the things to look out for, in terms of your psychology and how to use that to improve yourself over time. There are times, for example, where I would see a trade setup, and for some reason, my psychology, because the human instinct is not wired to lose. We don't want to lose. We're always afraid of losing. So that is why when you become a professional trader, it's not just only going to teach you how to make money. It's literally going to make you to become a better human being. That's the truth. So because when you become a professional trader and you begin to see all these things and you have real money in the market, imagine a trade comes in here. At this point, let me say if I was risking $1,000 for this trade, that means at this point, I'll probably be making like $4,000. And then all of a sudden, that money returned to like negative $500. You can imagine the human emotion is not going to accept that. The first thing the human will want to do is just to, hey, let me cut short my trade. And what happens after that? The trade plays and plays and plays along and then hits your $5,000 mark. Imagine if that was your goal. And then when that happens, you begin to bite yourself and you begin to get angry. Oh my God, no, I should have led this. I should have done that. And that is how, trading is in reality. So when you become a trader and you master your emotions, you're literally going to become somebody who becomes, a better human being at literally everything. So this is basically the reality of the market. And this is how to use the risk to reward tool. Now, for me, I have actually tweaked this a little bit, and I think I showed you some time ago, because if you pull this to your trading view, you may not see exactly this type of setup. So let me just show you what I've done. So what I did on the style for me, my stop color, I changed it. The default color is red. It's actually red. I actually changed it to, to blue. That just my preference. And that's also because my candles, so I also changed it. My target color, the target color is usually, I think, green, but I changed it, to this color for me. And that's just it. And then also, I also did something. The text also, you can increase the text. You can see you can increase the text here using this tool. But I put mine, to 10, which is the lowest. And then also there is the price label. So I think by default, also the price label would always show. That means when you put the tool, you can see the price label is showing here to the right. So that allows you to compare whatever it is you're copying onto your trade station. And then, you make sure it's correct. So you have the price label there, but for me, it's not necessary. So I took it out. And then you also have the compact stats mode. Now, the default mode is like this. So you can see there is all the information about your stop. It tells you that that's your stop. You can see that. It tells you that number of pips you're risking is 5. You can see that. And then the amount, in terms of the contract size, if you were to paper trade on TradingView. Paper trade simply means is that TradingView allows you to enter trade like directly here. And I'm going to show you that if you're to do that, this is, some sort of contract size and all of that. So you also have the risk to reward here with the full detail that shows it's a 1 to 5 risk to reward ratio, 5. And then here at the top, you have, the target. It tells you the number of pips you're targeting, 25 pips, which is the last 2 digits before the last number here. So 25, so 25 pips. So you have that there. So that's the default way it shows. So here you can always show stats and all of that also. But for me, I just decided I just need a compact. I don't need all this information. I know what they are already. I just need to know. I just need my 5. So that's why I always use a compact mode like this. So I just have something like this. Okay. So that's how I was able to arrive at this. And that's how, of course, I draw this, right? So that's just something to note. So that said, I think we're good on the risk to reward now. Now, position sizing. Now you can always calculate your position size, right? That's in your head before you enter a position. But there's a tool that I always use actually when I'm trading. I'm going to show you that tool right now. So let me just switch my screen. Just a sec. Let me get that up, and then I'll just switch my screen and show you the tool. Okay. Just give me a minute. Just give me a minute. I'm coming. Oh, what's this? Sorry, trying to get this up. Not sure why it's not coming up as quickly as I need it to. Okay. Right. What's happening here? Sorry, the tool I want to use for you is not coming up. I'm not sure why. MT4. What's wrong? I'm having to restart something because it's not coming up. Let me try it again. It's kind of weird. For some reason, the tool is not. Okay, let me see if I can just. No, I need to show you this tool. It's basically a tool I use for position sizing, and I need to show you how it works. Do I have an alternative I can show here? Let's see. Okay, I think no, it's not even this one. Sorry guys, I can't, let me see. Sorry, that's tech for you sometimes. Sometimes this thing can just misbehave. Yeah, so I'm wondering why. Why are you not cooperating? Can I? Okay. Let's see. I'll be able to get another one. Okay. Let me open okay, so let me open. Let me just okay, while you're here, let me share this one now. So able to get another one to work. Let me share this. Can you see the screen? I guess you can see the screen now. Okay, cool. All right. So yeah. So here I just turned up an MT4 platform, right? So MT4 basically is a trading, is a trading platform, when it comes to trades and all of that they use for taking trades and all. There are different ones depending on brokers and also prop firms. And by the way, of course, based on what we're going through, and particularly taking you all through this, I've talked about prop firms and how prop firms provide capital and how you can use those capital, how you can use the capital to be able to grow your account instead of you having to risk your own money and all of that. So yeah. So hopefully, at some point, that will be something that you consider taking because they provide a simple way for you to enter, to actually get capital, right? So now, anyways, I want to show you this tool that I use for position sizing. So it is called a position sizer, as you can see it here. So this is the tool here. This is what it's like. Now I'm going to show you basically how, I combine this tool and also trading view, for example, if I want to enter a trade. Okay. So now you can see here that just a sec. So here you can see what we have here is basically, it says, of course, position sizer short. That means this is a short position. Entry is short. Short means, of course, you're selling, right? Long means if you click on it, it toggles, it switches between long and short. So long means you're buying, right? So long and short. Now we have this. Here, this is where the price is. Here you have the stop loss, and then here you have the take profit. This tool allows you to sort of determine your risk to reward even before entering a trade. Now, I think I'll need to open a demo account to really illustrate this. So let me open a demo account with what now? I want to open a demo account. This platform, I think, okay, I can only use a demo account of this guys. So let me open a demo account with this guys. New demo. So let me open an account of no guys. I have to come here before I can open an account. Oh my god. Sorry, let me see. Can I get around this? This was a demo account, so it seems there's nothing in there. I should be able to MetaTrader. Let me open demo account MetaTrader. So cool. So let me just type in my name, Jonathan. gmail.com. Doesn't make exact this thing. Number. Just put a number. Allow me, okay. Deposit. So let me assume I'm depositing how much now? Let's say, what do we have? Let me use a deposit. 3, I think. Okay, I can check that. All right, so let me use 100,000, right? And let me use a leverage of 1 to 100. Okay. And then what else? I have to agree to this, I guess. Where's the next button then? What's missing? Why can't I open? Let's see. Oh, what's happening today? Can't open, seem to open an account. Account type. What's the matter? Trader, new demo. Yeah, everything seems fine. I really need to show this tool. This is just weird of all weirds. I'm coming, guys. I'll keep trying. Keep trying. Whatever is behind this, need to deal with it. Okay. Need to deal with it. Let's see. Let's keep trying this and see if we're gonna have success. Okay. I think it's okay. It's a sec. Get there. You know, one of the challenges recently is MetaTrader has been, I think, banned in the US or something. So now what you have, it's all the propriety, all the firms basically are the ones now allowing users to sort of create accounts, you know, or to download MetaTrader directly from them. And I think that comes with certain issues. So I would have to just open an account directly with one of these brokers and then hopefully use that to show you what I need to show you. So please just a second, okay? Just get that done. And we can go through this. Okay, so open a new demo account, MT4, 1 to 100. And let me use 100,000. Let's just okay. I'm trying to sign into one. Let's hope this works. Okay. I see world. I see market was this. Market demo 04. 04. It's markets. 04. Okay. Please work. Okay, cool. Yeah. Okay. So I think we have one we can use. So let me just share this. Okay. All right. So I think you should be able to see my screen now. So I just you know, opened this account, this demo account for with one of those brokers, I see. Well, just to show how this works, right? So let me put some pair that we can use. So euro dollar, let's have that up. Let's see that. Minimize this stuff here. Okay. So let me put the pair. So chart window. Okay, cool. Yeah, so we have a chart window now. So what I've done is I basically just added euro dollar. You can see that euro dollar here. And this is basically the chart. This is not the candlestick only. So I want to use this candlestick. So I'll have this candlestick up here. So you can see the candlesticks. Now for me, I don't usually like this. I usually just do, a quick properties and then change the color. So bar up, I'll just use maybe my normal gray here. Bar down, I would use, my blue, or the other way around. So bull, I would use, the gray again. Their candle, the blue, line graph, adds volume, all of these things. I think, let me see if it works. Okay, cool. So again, for the background, I would want to use white so that it's the same thing we'll have in trading view. So you can see it here anyways. And then for the grid, I usually just take out the grid, right? I don't need it. So it's just plain like that. What else? And then, okay. Or you have, okay, you're not able to save this. So I'll just say, okay. So anyways, this is how I usually love my screen. But you see something has gone, the time, the bar here is also not showing me anything. So I need to fix that. So I would need, for the foreground, I will need to change that to black. So I can now see, the price and also the date there. So, okay, so we now have everything here. Now, so this is good. So now I can show you what I want to show you with this. Now, how, to now use the position sizer. So I have the position sizer tool here under expert advisors. I would also, I'm noting this because I'll also need to show you how to get some of these tools later on, right? So let me just note that. So position sizer tool. I'll show you, I think by evening, just remind me if I missed that. So position sizer tool. So I have that under expert advisor. So I'll just double click it because I've set it up already. And then it will just appear here on my screen. So you can see it here. There's the tool here, and it also shows you the top right here that there's a position sizer here. Now, how do I use this? Typically for trading, right? Now you can see that under the main bar, we have long. I've already explained this, stop loss and then take profit. So this is how it usually is. And then we have the order type, instant, and then we have pending. Now, there are different types of order type in the market. And what that simply means is that, you know, if, for example, you're in the market, there are different ways to enter the market. One is either you, you know, immediately you see price moving, you enter instantly. The other one is to enter on the limit. That means pending orders. That simply means that the price has to come back to your entry. You know, the price, for example, something like this. So this is like a limit entry. So this is also where price was, and then price broke this high. So I'm now expecting that price will return to this area and tag me in. That's a limit entry, pending entry. So that means I'm waiting for price to come in, tag me in before I'm in the trade. While an instant entry is that if price is here, for example, and I feel, oh, price has broken this high and I feel it's going to hold, I will just enter directly at market price. You know, that's instant entry. So that's the major two entries you have here. So of course, for based on how, you know, I trade, I always enter on pending limit entry. So this is what's going to look like. Now, how do I use this tool with what I've shown you, you know, on the risk to reward tool? So here we have the order type. We have the account balance here, as you can see, 200,000, right? So we have this, and then down below here we have, you know, the risk, and we have the risk also in dollars, and then the result, that's the reward. You have also the reward. Now, without even changing anything here, let's just copy what we have in the tool on TradingView. So I'll go to TradingView here. So this is our tool here. We have a 1 to 5 risk to reward. So I'm going to just select that, input. I'll copy my entry price, copy, and then I'll paste it here because it's a long position. I'll paste it in the price here. I'll then also copy my profit, and then I'll paste it also in the profit here. And then I'll also copy my stop loss, and I'll also paste it here in the stop loss position. So you can see that, right? Now with this, sorry, I had to make the chart to be 1 minute so you can actually see what it's like. Now with this tool is not too, sorry. Okay, you know what? Let me take this tool, or let me put the 1 to 5 somewhere where you can actually see what's like, where current price is, because that's where what that is showing us there. So let me bring the long tool again, and let me put it around here. So let's say this is where we're at. 5 pips as our stop. So I'll just move it to 5. I can actually do it like this to move it to 5 by dragging, or you can simply just come in here and say stop loss, move it to 5 pips. So this 50 means 5 pips. Remember the last 0 is pipette, you know, so 55 pips. And then I know that if I'm risking 5 for 1 to 5, that will be 25. So this is supposed to be 25, right? So that'll be like 215, right? So you just say okay, and then you can see everything is in place, right? So let me copy this price here. So entry price, I'll put the entry price here. I want it to reflect here on the screen, the position appropriately. So for profit, I'll take profit. I'll put that here, paste. And then for stop loss, I'll copy that also and put my stop loss here. Cool. Now, so you can see that. Sorry, what do I have here? Just a sec. Is this correct? Along 28288. We have the there, stop loss, take profit 588. So we have it there. Now, a few things. Now we've put, okay, so first off, we've copied all our parameters. So price, stop loss, and take profit. I'll put that in the tool. The next thing now is how much risk are you willing, what are you willing to risk per your capital? So our capital is 200,000. Now, 200,000, 1% of 200,000 is 2,000. So you can see here, it's telling me that because I've put 1% here, my risk, my risk in USD is now 2,000. So you can see that, right? And then also we have, you know, the reward is now also telling me that because my reward is now also what? As you can see, 9,700 and something there. Okay. Now let me just I think I need to tweak this tool a little bit to really fit what we need or what we need to use. Please, just a second. Let me do that here in Trading View so that we're all on the same page. Oh my, this is too big a tool. So I was using too large a size. So let me just reduce this. That's why we couldn't see everything on the 1 minute there. So let me reduce this. Oh my. Okay. So let me use what I'll normally use 2, 1 to 5. Okay. So let me do this. All right. So let's use this. I think this will now be visible on the tool for us. So price, let me put price there. Take profit, and put my take profit. This is literally what I do, sincerely, when I want to enter a position. And yeah, so I copy this. So we have all of that now in place, right? These lines are not too clear. I'll edit this line so that you can see more information here. So we have that. So our 1 to 5 trade, this is what the position is going to look like. And that is it there. Now on the tool, we have our risk 1%, and then we have our risk here. Still 1% is 2,000, and then our reward, which is 1 to 5. So 5 times of our risk is 10,000. So that's what we're looking at making. So our risk to reward, you can see the tool here also says 5, right? And then the tool automatically calculates your position size for you and puts it at 100. That means 100 lots. So you can see it says in lots. Now you can easily change this. If you want to enter a trade from 100, you can say this is 50. You can make this 50, right? And then it automatically updates your risk to 0.5%. That means you're risking 0.5% of your account. And also your risk is $1,000, and then your reward is $5,000. So this tool, without you having to do the calculation, because imagine, for example, your account is maybe at 248,956, something, some funny number. Imagine you have to do that calculation with your head, before you know what you're actually risking. It's going to be a long walk, but if you just copy your price in place, and then you just quickly type in your 0.5, or you want to risk 0.5% of my account, it automatically updates it for you. Or you can say, I only want to risk 0.2, and then it will update quickly to what you're risking. So I know I'm going to lose $400 if this trade goes against me, but I would make $2,000 if it goes in my favor. So you can quickly change this risk here by just typing in, and then it automatically updates it for you without you having to do the calculation, right? So that is why this tool is super important. I'm going to show you also how to get it, right? So this is how I usually enter a position. Now I normally change all these colors to fit something that's more visible, but this is the stop loss based on what we entered here. This is the entry, based also on what we enter. You can see that it says entry. And then here, this is our take profit distance or take profit point, right? Based also on our data here. But you can see how this tool quickly helps you to manage your position. So I know that I'm risking 0.3%. I know what that is. I know what my reward is. And then I enter the trade. And then I don't do anything else. I just, watch. If it's a win, fine. If it's a loss, no problem. It's a game of probability, right? So that is it. So to enter a trade, usually this trading tab here, this is where I now come to and I click on trade, and then it opens a position for me, right? So if I click on this, the market is closed. I'm not sure if this is going to work, but let's see. Okay. Now, another thing is because this is an expert advisor, it's called an expert advisor. So I have to click on this auto trading. That's to enable automatic trading. So I click on that. If I say trade, it tells me everything. So it tells me what my order is. It's a buy limit. That means it's a pending order. That means price has to come back to my entry before moving forward. It tells me how much I'm risking. It tells me my equity. It tells me what my risk is, what margin is, and then what my entry, my stop loss, my take profit is. And I say execute the trade. I said, okay. Now it's not going to execute the trade because the market is closed, right? And that is it. But this is basically how, I usually would enter, a position. So I've done my analysis. So trading view is for analysis. You do your analysis, your technical analysis, you know where you are in the market. price meets your criteria, your setup criteria, and then you see everything, and then quickly you basically set up, put your tool in place, and then you come into, MT4 or MT5, and then you copy all the parameters in place. You determine your risk, which for me is always a 0.5. And when I do that, I know I'm risking $1,000 to make 5,000. If it goes in my favor, good. If it goes against me, I know what I'm losing, right? So you do this, and then trading, click on trade, you confirm, and you're in a position. So this is how I use it. Now, just a quick one on the properties. By double clicking this, I have this opened up, but I'll show you exactly how to get this this evening because we've been on the session for a while now. So I'll usually just change the stop loss from lime color to red, right? Because it's stop loss, so red is okay. And then the take profit, I'll change it to the color. I'll change it to green because I love greens. And then entry points, I'll leave it at blue. My stop loss line, I'll also change it to red, right? I think I use this red. And then the take profit, I'll put it at green. This green seems to be too light, but we'll see. If it's too light, I'll change it. Let me use this darker green, right? Just a sec. I think this was the one, is it? Hopefully. Okay, so I'll normally change this to this. And if I say okay, you can see it has updated, the colors for me. They are now more visible. I can now see this. Let me double click again. Let me also update what now? Let's update some information. Let's say show the percentage, this variable here, say show the stop loss percentage label, which is yes, I want to see that. So I want to see the percentage label, show the take profit percentage label. Also, I want to see that. What else? I think that is that for this. So let's see what else. Font size. I think the font size is okay, but let's just make it maybe 14 or something. So that is perfectly okay, I think. Then what else do we need to change here? There are other things anyways, which may not be of interest for now. So I'll just sort of break it down later on when I get, go through this tool and also how to set it up. So let's just say okay for now. So you can see on the tool, it tells you that our risk, our stop loss position is 0.5%, just like you have here. And then it tells you it's $1,000 you're risking, and then it tells you what your take profit is. And if it's in your profit, that means you're going to make 2.5% of your account, right? That is why sometimes when you see my posts, I'll also put, maybe if I put 1 to 5, I'll also put the percentage. That means that was 2.5% of my account because I was risking 0.5%. 5 times of 0.5 is 2.5. If you're risking 1% of your account, you also see that means here it shows 1%, you're risking 2,000 with the hope of making 5% of your account, which is $10,000. So you can see all the information using this tool. And that is why I use this tool. It's really nice. It's actually at Forex, as you can see here anyways, but I'll break this down for you much more later on. Now, there is also something I usually use for my take profit in terms of trade management. When I enter a trade, especially when it's 1 to 5, I would always take out my risk at 4R. That means if I'm looking to make 1 to 5, when it gets to 4R, I'll take out my risk. And what that means, I'll take out this position, 2,000. I'm risking $2,000. I'll take out $2,000 and allow the remaining, to hit my target. And how you set that up is also here. So they have this tool here that allows you to set like 2 take profits. Let me show you where it is. Here you have it. Okay, this is for the risk anyways. Let me also just explain this. So for the risk, you say, if, for example, you have 2 risks that you always use. For me, I always use 0.5 and 0.25, depending on, my position, all of that. So I'll have these 2 risks. You see how this shows on the file, on the tool anyways later on. But then the take profit, I'll normally have, 2 take profits. And I'll show you how to save this. So let me see, what is that tool? Or what is that option rather? For take profit. So take profit point, no. Let me just get the variable here. It allows you to set more than one take profit target. Where is this? Where are you? Look at it here. So it says take profit number, more than one target to split trade. So normally, sometimes I will have two, and then I'll just have that. So I need two. So if I just say, okay, you're going to see now that we have two take profits, right? So we have this, and then we have this one, right? Now, there's also something else. My first take profit is always 4 times my stop loss or my entry, right? What that means is that 25%, that means 1 to 4 hour. That means when I get to, let me go back trading view. This is my trade here, right? Something like this. When the trade gets to 1 to 4 around here, this is 1 to 4. Now, remember, if, for example, you're risking 1%, that means you're risking $1,000. 1 to 4 simply means at this point, you're at $4,000. If you take out 25% off of 1 to 4, that's $4,000. That 25% of 4,000 will be 1,000. So I'll normally take 25% of my total position at $4,000, which will be $1,000. So I've taken out my risk. I usually don't move my stop loss. I don't move my stop loss ever. So I'll normally just have it like that. So I'll take out, 25% at 1 to 4. That means I've taken out my risk, because price can always come back. Price can always do this, come back and then do this, tap you again and before going. So I don't usually, sort of move my stop loss. I just leave it in place. I just take out my risk at 25, at 4 hour, 25%, which is equivalent to $1,000 if that's what I'm risking. And then I allow the remaining 75 to hit my take profit at 1 to 5, like this. So how I usually implement that in trading on the platform is this. So here you have take profit 1 and then take profit 2. So on the 2 allows you to determine what your take profit, right? It allows you to determine how much of your stop loss should be the multiplier for your take profit. So there is this, let me see. Sorry, let me look for it again. Just look at it here. So you have take profit multiply for stop loss value appears in take profit button. So for my take profit, it's always 4 times. At 4 hour, immediately it gets to 4 hour. That's where my first take profit is going to be. So at 4 hour, I take out 25%. So I'll say that the multiply for my stop loss, my take profit multiply for stop loss should be 4 hour. So when it gets to 4 hour, I take out 25%. Now I would say, okay. Now, when I do this, let's look at how this works out. Now, I'm risking 1%. I'm aiming for 5%. But when it gets to 1 to 5, I'll take out 1 to 4, I'll take out 25% off. Now, you can see here, this is the long position. This is my price. This is my stop loss. This is where my take profit times 4. So that means if it gets to times 4 of my stop loss, I'll take 25% off. So if I copy this, let me copy this again. Let me copy all of this information again. Price, I think that's still the same thing. Take profit. So the take profit, I'm going to put it a take profit here instead of here. That's my last take profit. That's 1 to 5. Then my stop loss is here, right? So I'll copy my stop loss. It's still the same thing. Now, when I put that there and I click on this, it will, didn't update that. Just a sec. So normally to update my take profit, to multiply the stop loss 4 times to give me my my take profit. Oh, it has done that. So by clicking it, it worked. So it has multiplied my stop loss 4 times, and this is where my take profit, my first take profit is. Now you can see that on the screen here. You can see that now my take profit, I'm going to take 25% off here, but you can see here it's not showing the right percentage I want to take off. Now, where do you fix that? Is under trading. So under trading here, you have take profit 1. What share of take profit 1? What share of your position size you want to take out at take profit 1? That's 25%. And then the remaining 75%, you leave it to allow to hit your take profit 2. So this is where you set that up. So now you can see that when the price gets here, you can see it takes 1% of my position. Now 1%, by the way, is what you're risking. So that's the 25% of your 4 hour. You know why I'm saying 25%, so it's not confusing. This is a 1 to 5 trade. When you get tagged in and then your price comes here, that means you're about 4 times of your position. You're already making 4 times profit of your stop loss. So to take out, your risk, which is, like 1%, like 2,000, that is going to be, let me make this easy. Let me risk 0.5 so I can use simple numbers. So you have here, good. So here you have you're risking 1,000. When price gets here, that means you're making $4,000. So to take out 25% of 4,000, right? That will give you 1,000. So that's why I'm saying I'm taking out 25% here. But you see how the system automatically computes this for you. Now, when I started, really, of course, when I, started entering positions, I would always do this calculation manually. Sometimes I'll write it down and all of that. And at some point, it became a lot, cumbersome. And that's why I decided, to look for a tool that automatically did this for me. So, and when price gets here, automatically the system closes me out, takes out my risk, and I now know that my trade is now safe. So if price decides to come back here, I'm not going to be afraid that, hey, I'm going to be taken out, and then price can, come and hit my target. If it hits my target here, it takes out 1,000. Here I get 3,500. This plus this will give us 4,750, right? So that's going to give us, that. And look at basically all of that. So this is basically how I use, this tool to determine my lot size. I don't even think about lot size, as a matter of fact. The system automatically computes it, because if you just switch your risk, let's say 0.25%, it automatically computes that for you. 0.5, it calculates your stop loss depending on your equity, so you don't have to do all this calculation yourself. All you need to do, copy your parameters in place, have, of course, this setup just the way I've gone through this, and then you're able to enter trades rightly without being afraid of how to calculate your position and all, right? So ladies and gents, I think that is it on how to okay, so I think that is it on how to, really just navigate this, right? And just what now? And basically just manage your trade. Okay. So yeah. So let me see. Do you have any questions? Sorry, just a sec. See, I've lost track of my tool. Sorry. See, I've lost track of the trading view tool. Okay, it's the trading view rather. Zoom tool. Okay, so guys, yeah, so that is it, right? So I think I've been able to, break this down for you today. So Rick's to the word, position sizing, and also the tool you use. I would break this down for you more later this evening, how you can get this, how you can set it up, how you can save, your settings and all of that, and you can ask more questions later on. So yeah, so that is it. So let me see. Do you have any questions just before we wrap up for today? Okay, you can now unmute yourself and ask a question, yeah?
Yeah, thank you. And the question I want to ask, you said you don't move your stop loss.
Yeah.
Is that a matter of preference, or it has like a risk attached to it? I understand that if and the market goes and comes back, but that you'll be in at your take profit level. Doesn't moving the stop loss protect your downside and also give you an opportunity to make more profit towards the upside instead of just taking your risk? So yes, I heard there's someone that said he doesn't, that he puts he what's it called, increases his stop loss gradually, such that if the markets want to reward him extra, interfere with that. Is there any risk attached to that?
Well, so yeah, so it's a matter of preference, right? And usually it's something you'd have to test, and then if it fits your psychology, right? Because your psychology will determine, what you actually become comfortable with. There are persons now, for me, through back testing, I've realized, and also for testing and life market, conditions, it usually pains me a lot when, for example, I move my stop loss and then the price comes and hits me and then moves in my direction. It's not really something palatable. So that is why I usually would enter my trade, with the with the mindset that I'm accepting the loss. So if it's a loss, I'm accepting that loss. And what that does is that it helps you, because now you'd have to actually experiment this, and what works for you, then you can now begin to use, right? And because at the end of the day, trading is a psychology game, it's a mental game. You don't want to do something that at the end of the day you begin to regret. Oh, that would have been a winning trade, but because I moved my stop loss, because I did this, because I did that. So that's why at the first instance, if you're entering a trade, first accept your risk, right? Usually moving a stop loss means that you haven't really accepted the fact that that could be a losing trade. That could be your risk, right? Now, you can move your stop loss depending on other parameters too. Sometimes maybe you want to move it to break even and it has moved significantly into your position, but price can do anything. Price can always come back, hit you, and then move in your direction. So it has to be something that you need to back test. And depending on, what works for you, you can run with it. Now, another thing is this: moving stop loss means you have to be actively managing the trade. Now, depending on the lifestyle you're living, and if you don't want your psychology, because imagine you've entered the trade and then you're just watching price, and then you're moving stop loss. That's a lot of active management. That could take a toll on your psychology. But set and forget. You just basically set everything and you forget about it. If it hits your stop loss, fine. You look for another position. If it hits your profit, you're good. It helps your psychology, but at the same time, you would have to, test this in the market, test this in live condition, and come to a conclusion on, or resolve on what really works for you, and then stick with it. Yeah. So I think, yeah. Okay. So you can let me know if that answered your question, or
Yeah, it's all right. It's perfect. Yeah, thank you.
okay. All right then. Perfect. So I think anyways, let's put a wrap here. We've spent quite some time today. So this evening again, I'm going to also open the floor so that you can also ask questions. So just review all we've been doing and ask your questions so that any gray areas I'll be able to clarify, and anything I miss, I'll be able to mention. And yeah, we'll be good. So once again, thank you so much for, coming to class today. It's an honor really to share this with you, right? And it's a privilege on my own part too. So I look forward to speaking with you this evening. Okay. So do enjoy your Saturday, and cheers. Bye.